Hey everybody, Josh Hall here. Wanted to just give you a quick update on what's going on here in the real estate market and the mortgage market. So one thing I'm hearing a lot about on social media and on the news is the whole word forbearance, right? So the ability to postpone some loan payments. I wanted to just have one of our experts that we go to on all sorts of these types of questions on with us today. So I have Keane from CrossCountry Financial with us, and then Jeff Knapp, our buyer specialist on our team, is checking in from his music studio in his house. So we wanted to just connect with you, Keane, and say, okay, from a lender standpoint, what is this forbearance thing, right? What should somebody know if they are looking at it? Who is this for? Who is it not for? Just kind of give us the overview of what it is, and then maybe we'll dive into some questions as we go through it.
Yeah. So forbearance is something that's existed in home loans since I first got in there. It's a process where the lender modifies the note to allow the person to get some payment relief. I do not know at the moment how this is going to report to credit now that it's a national thing, but traditionally forbearance agreements do not report well on credit. So
it damages it has the ability to damage your credit traditionally.
It does.
Okay.
It does. I would imagine there's probably some form of relief in terms of how they're going to do it this time. But traditionally, there is a certain code that they put for on-time payments, late payments, foreclosure, and there's this one in between that they use for things like forbearance. And so I'm very curious to see whether or not it reports that way. I think that best case scenario, it reports like a deferred student loan, and it looks like it's paid on time, even though it is deferred for a couple months. Worst case is it shows like how it does in the traditional method that's they've been doing for years, which it has a special code in there that, is not a good rating. It's bad for credit.
So if somebody's thinking about, okay, is this forbearance thing, is this something I should look at? Who is maybe somebody that definitely should not go down that option, and who's maybe somebody that said, this might be something that you'd want to look at from your perspective?
So, yeah, absolutely. There'll be some more information in terms of how it reports the credit in time to come. There's a special guidance for what kind of loans are allowing what kind of forbearance. Like for instance, USDA, their forbearance says that they'll give up to 6 months, and if needed, they'll give another 6 months. My guess is there's probably not going to be a negative impact to credit. But you have to remember that the way that they code it is one thing, and how they show it in the credit report. But it also, in the current guidelines, would make you incapable of getting a home loan, because even if it reports perfect on credit, we have to prove that you've been paying your mortgage on time for the last 12 or 24 months, depending on the program. So based on the current guidelines, it would impact your ability to get a loan. So you definitely would want to, the people who should use it are going to be people who need to, in the current marketplace. If you don't know if you're going to need a loan, the people who should be doing it are people like, I'm out of work. I don't have an income. I need some way of just getting by and not feel like I'm going to lose everything. Well, don't worry about what it's going to do to credit. It's not permanent. It's not like having a foreclosure. It's still going to be better than that, but it could negatively impact credit. Sure. If at best it doesn't negatively impact credit, but it makes you ineligible for a loan, right? That might be an option. And they may update guidance where forbearance associated with the virus won't make you ineligible for a loan, but that guidance hasn't been released yet.
Yeah, so that's kind of all to be determined later. So if I understand what you're saying correctly, so it may not have a negative impact on your credit score per se, right? Because they may have something that essentially says forbearance during the coronavirus doesn't affect your credit score essentially, but right. That doesn't necessarily mean it won't affect your ability to get a mortgage, whether that be a refinance or a purchase at some point in the next year or 2 years or however long that time looks like. So If you're somebody who is thinking about making a purchase in the next 12 to 24 months, forbearance should be a last resort option currently, not a, hey, here's an idea that I'm going to try and, save a few grand every month by deferring off my mortgage payment. If you're planning on buying something the next year or two, that's probably not a good plan, because there's definitely a significant chance that would hinder you from getting a mortgage. Am I understand that correctly?
That's right. And on top of that, there's a reality that rates are record low right now, right? So for a lot of people, doing a forbearance, you have to be very careful. This reminds me a lot of the last recession where people would call their lender and accidentally get sent to the modification department instead of the loan officer who could refinance, and they accidentally start the wrong process, and the modification process literally made them ineligible to be able to do a refinance, and the permanent reduction of a payment plus being able to skip a payment and so forth, is actually would have done them more good. It doesn't hurt their credit. And so for a lot of people, that's probably the better solution,
But that's my concern, is because you're going to have people who are going to maybe take advantage of this forbearance because they don't have their income right now, right? But they can't make their mortgage payment, so they're going to call their loan service provider and they're going to ask for the forbearance, and they're going to think I think there's this conception that people are having that it's not necessarily forgiven. Maybe it's going to tack down at the end of the loan period, or it can be financed, or you can just refi out of it. But what I'm understanding is that the possibility to refi isn't going to be there.
That's correct.
If your loan's in forbearance, then you can't refi out and pay that lump sum that's going to come due, correct?
Right. The one thing we can learn, having gone through a version of this back in 2008 through 2010, 11, 12, when the market was going down, is that when the government implements any new program, so back then it was the Making Home Affordable program, which was a handful of options for people to, if they had to go through a short sale, do modification or refinance. It was a gigantic group of programs they released, which you could say this is a version of that happening now, right? Not exactly the same, but same thing, stimulus money to help try to stimulate the market. What we definitely knew from going through that before is when they implement these new programs, they don't always think through all the details. And the first efforts to use the program usually end up having lots of versions of form failure, right? And it's only when they realize that there's flaws in the program that they start to tweak it. A lot of people who applied for a HARP refinance at the beginning of the last recession were declined, and they couldn't do it. And then later on, they modified it and they made it so they were eligible. They kept on tweaking it. And so you would bet that this is a different version of that, but there's any long-term recourse associated with the market for the decisions they made putting out these programs, there's a good chance that they'll tweak it and make it better, but there's a chance that they won't. And so that's just a risk you have to take. If you know for a fact it's not going to make you eligible for a loan for the next 12 or 24 months, you have to weigh that into your decision making. But I definitely wouldn't do it. I definitely wouldn't do it if it's not necessary at the moment.
And the other thing I wanted to make sure we hit on too is people need to talk with their specific lender to see how their forbearance program works. Because from what I understand, there's a few different options. There's one where they say, okay, maybe we give you 3 months with no payments, and it gets added on to year 30 of the loan, right? And there's others that say, okay, you're going to have 3 months with no payments, but then at that fourth month, you have to bring everything current, right? So if you have a $2,500 payment, there's $7,500 plus your current month payment. In month 4, you now have a $10,000 bill instead of a $2,500 bill each month along. So I think people need to make sure they're getting clarity on, if I'm not making these payments, what's happening? Because if their income is reduced or whatnot during this next few months, the ability to make a $10,000 payment, in 3 or 4 months is not going to be a good situation either. The other thing I was just thinking about too is, I know we've had a lot of clients that have done refinances here this last year with rates being where they're at. But I've definitely come across a lot of people who should have done a refinance but haven't yet, right? So let's say they are working now, right? But maybe just everything's a little bit tighter because everything's going on. As long as they still have income coming in, right? Maybe looking at doing a refinance now. Maybe they have a 4.5 or 4.7 or 5% rate, right? And if they can refinance down into a mid-3s or wherever rates are at now, by doing that too, depending on how the refinance is structured, there's likely 1, maybe even 2 payments that they might skip. So you might be able to get some temporary relief right now by doing a refinance. 1, you're getting a lower payment down the road, right? And then you have the ability to skip a payment or 2 during the process of the refi. So that is maybe another way for somebody to take advantage of these rates that they haven't taken advantage of so far and still get a little bit of temporary relief in the meantime.
Yeah, absolutely. I mean, because the idea of refinancing is that you're willing to pay some form of fees to get a different term of the loan where it's going to save you money, and that you're going to keep the property and the loan long enough that it'll pay for itself back, right? So the only time that you could picture someone doing a forbearance who's planning on staying in a property, is going to be why they, wouldn't refinance instead is only because they don't qualify. So if someone plans on staying in a property for a while, it'd probably make more sense if they can, refinance, get better terms. But one where, they paid some fees, but the rate was lower and it's going to pay for itself back over a period of time. And then after they have that loan, if things get really bad afterwards and they have to do a forbearance, it's more likely it should happen on the new loan with a lower rate than it should be on the old loan that keeps them from being able to refinance anytime in the next couple of years when rates are still low, right? Because then you just make yourself ineligible to lower your rate when rates were the best, which is, we saw a lot of that between 2008 to 2012, where people would do a modification, impact their credit, and then it ruined their chance to be able to do refinance, and then rates were super low,
right.
and it kept them from doing the very thing that they were trying to do.
Sure.
And they could have.
Sure. Cool.
Yeah.
Well, that was kind of what I wanted to cover here in this just kind of short little video. We wanted to be able to get out to our clients just as a resource, right? And we know that everybody's situation is different, right? So, everything should be looked at individually. So if you're someone who's looking at doing a forbearance or refinance or, reach out to myself, reach out to Keane or Jeff, and we can get you kind of talk through your options and see what makes the most sense. But thanks, Keane. I want to, like I said, I know you're the expert on all things of this sort of thing. So I wanted to just tap into the expert's knowledge and get some guidance so we can help our clients going forward. And as we've talked in some other videos, in this video, we've referenced 2008 a lot, and I actually did a video last week of why our current situation is not like 2008 from the standpoint of economy and market wise, right? But there are definitely from the lending side, right? There are some definite similarities. So probably more similarities in that aspect than some of the others. So that was it for now. Hope you guys are doing well. Let us know how we can help you and serve you. We're happy to help you guys however we can. Stay safe, and we'll talk to you soon.